Hi there, traders. Now, I thought it a good time to give you a bit of an update because there are some really good technical setups and there's a few little tweaks in the market that we need to probably just anticipate, keep an eye on. Now, if you just scroll down through the calendar for this week, right, it looks like there's a huge amount of data, right? And there actually is, but we're in the third week of the month. So if I go to the high impacting numbers, you'll find this is where you'll see how busy the week really is. You got US durable goods, FOMC minutes, and then the GfK, the German GfK consumer confidence numbers. They're probably the key events. Okay, now I'd have to say at this point, you got to think retail sales will be a part of it. So just dropping it back to the medium impacting numbers, Canadian retail sales figures, to me, that's pretty, that's something worth keeping an eye on. We've got lots of speakers, Bank of Canada, Governor Rogers, and the Fed. There's a whole bunch of speakers coming out there. So just keep an eye on that as well. RBNZ interest rate decision. Now this it's a very high impacting event, low liquidity. So one of the worst liquidity major currencies, 0.75% expected. So if that doesn't turn out, we're going to see some sort of fireworks. But I'll tell you what, the RBNZ's been very vocal and very transparent. So I can't see that not happening at this point. Now, so what am I talking about? Like there's things happening in the market. Now, the markets have just clicked over for the new day, okay, after 5 p.m. New York. There is a risk-off profile. You can't see it in the major currencies just at the moment because the data's just been reset. But I can tell you the euro, sterling, Aussie, Kiwi moving down and the dollar pairs moving up. So there's an event on and you're sort of trying to work out what it is. Well, I've just sort of been looking across the pages and it's starting to get a lot more airtime across the board. And what I'm talking about is the increase of COVID cases across China, potential increase in lockdowns, that impacts global growth. And what that does is it creates the US dollar safe haven. And that could really see the US dollar come back. Even after the weaker non-farms last month, slightly off, we had the weaker US CPI numbers really driving the dollar lower. But this is one geopolitical event that could give the dollar an underwriting bid tone. And what we mean by bid tone is an upward bias. So that's something you've got to keep an eye on. We haven't had major geopolitical events for some time, and it's been great, right? We've seen some great trading conditions, but just be aware how these geopolitical events can come into play. Looking at the global markets, right? The dollar index, you can see belted down after the US CPI numbers, coming back to a technical level. Euro, this is where I'm starting to see some things more on the currencies than some of the other instruments. And I'll come to the rest of the currencies in a second. But Euro, just breaking down, but trading sideways. It's got no major momentum because there's no fundamentals behind the move, as in core economic data or central bank activity. This is where the geopolitics can really come into play. And if it blew up, like, major lockdowns in China and global growth blowing up again, we can see euro back down towards parity pretty quickly. Gold, well, it's sort of drifting there. The commodities are under the pump with oil. Well, it's back at $80, but it has been down to 76, right? Still very elevated in my thinking. Dow Jones mini contracts there. Looks like it's ready to sort of break down a risk-off profile, which is what we're seeing. And if there's an impact on global growth, well, then you're going to start to see equities start to sort of roll over again. The NASDAQ sort of in limbo in mid-range, but with a bit of downward pressure. Obviously, the cryptos are under the pump and commodities, well, you'd expect that to keep going down if oil keeps falling, right? It's a major component of that commodity index. Now, this is the major part. Now, let me just show you what I'm talking about here. There's some really good setups across the board. The good thing is the weak US CPI numbers, right, gave us really good opportunities to get long some of these currencies, either short term through the release or medium term as the impact of those weaker US inflation numbers start to unwind the aggressive Fed interest rate plan somewhat. So we saw the dollar pairs get belted, the euro, sterling, Aussie, Kiwi go up. And that's where we are. But what have we got right now? So what we're seeing is a little bit of a drift, either squaring up of positions, right? Traders are either taking profit because of concerns around this major geopolitical event, or they've just run out of steam, right? What we need now is fresh economic numbers to give these major currency pairs direction again. Now, as you saw on the at the start there, durable goods is Thursday, and FOMC minutes and a few other things. So that's what we got to look forward to. But that's Thursday or Wednesday, Thursday. So so keep an eye on that as you go. But look at these levels here. If the geopolitical event, or say let's just call it the China COVID situation, there's a few other little simmering geopolitical events around the place, but that's the one getting the most airtime. You can see here, it's coming back and testing that resistance line. The market isn't confident yet whether to take it on or not. Dollar Swiss has already sort of flown the coop, and that sort of lines up perfectly with its stepbrother there, the euro, right? Sterling is right on close to that key level. Aussie's pulling back towards that major support line. If anything, Kiwi's still sitting up around 61, but don't forget, we got the RBNZ this week. It may shake things up a little bit there. And then you've got dollar CAD, okay, starting to move sort of to the top side, dollar yen also. So what I'm trying to say is there could, if the geopolitical side alone kicks in, we are going to start to see a reversal of those moves after the US CPI numbers. And we could see the dollar shooting to the top side, not on strong US numbers, but as a safe haven on the geopolitical side of things. Now, with this setup as well, let me just clear that screen. Now, any sort of, what you're trying to do is anticipate opportunities. Now, we've got good support and resistance lines here. Like, to me, a really weak euro number here would be ideal because it's already broken down, gives traders confidence to sell, and you see it sort of move to the downside. Sterling, well, good or bad numbers would be ideal because we've got a support trend line, which has got a number of hits on it. This is a major focus, right? And same with the Aussie too, coming up to that third touch. It's a very clear line to be working with. Strong Aussie numbers, it goes up. Weak Aussie numbers, it goes down. But once again, looking at that calendar, we don't have numbers, real big numbers on Euro, Sterling, Aussie. We do have the RBNZ. So you've just got to bide your time. What you're trying to do is match up a really good technical setup with what's going on in the on the fundamental aspect of the market. And that's where trading comes together, technicals and fundamentals. So you don't need to be chasing the market each day as well, right? Each week, I treat it like a game of football or a round of golf. You've got to work your way into it. You don't sort of just go flat out Monday, right? Wear yourself out by Tuesday, Wednesday, because that's when the market is really forming shape and it's easy to pick off technically, especially when you start dropping a few fundamentals on top. So that's where we are. So I just wanted to highlight the various sort of technical setups there, because it may be a storm in a teacup, it may be nothing. And it may be just the fact that the news services don't have any major news, and that's why the China COVID worries are getting more airtime, or maybe it's a real thing. Keep an eye on the equity markets, right? US equity markets are the raw nerve. That will tell us generally if this geopolitical situation is a bigger thing or not. Now, I know we're coming into the Black Friday sort of sales and a huge amount of retail sales activity going on. To me, I tell you what, the global markets are in trouble because now Black Friday has become Black November. And what I mean by that is everything's on sale for at least a month, if not half of December now. And that's because businesses are not coping with the high inflation, struggling to get employment or workers. It's just, there's a bit of a calamity going on here. And I think, to me, it favors a stronger dollar just on a safe haven perspective, right? So once again, global concerns about growth and China. You're going to see their commodities get hammered. Obviously, China are a big user of commodities. That's something to keep an eye on. And as you go forward into this, don't forget the safe havens. You're going to start to see if there's a significant play here, it should be on the safe havens. And you're also going to see some major activity on the risk on, risk off pairs, right? So there are plenty of things happening, right? It isn't quite weak as far as fundamental economic numbers go. So just keep an eye on the technicals, see if any random geopolitical news matches up. If it doesn't, stand back and just relax, right? There's not much you can do. You can't make the currencies break down or break up, you've got to wait for the opportunity and go from there. All right, guys, that's pretty much it. We'll try and keep you updated as we go, and just relax, let it happen. Good luck. Cheerio.